It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And it's your Real Estate Breakfast back for the weekend, breaking down for you the Aussie property market. Got another busy Saturday morning property show coming up with Australia's independent voice on all things real estate. And it's been a worry where we go with this Iran war. Where is it heading? It's another global shock. They seem to be, don't they, coming at regular intervals over the last 5 years. Trump has gone down a path that even if he wanted to retreat from it, the damage has been done and probably more damage to come. It is a Saturday. It is March the 14th. If you're celebrating your birthday, blowing out the candles, happy birthday to you. Sam Worthington, the actor, turning the big 5-0 today, and Corey Parker, the former captain of the Brisbane Broncos, he is turning 44. And on this day, a pretty big day for Bob Hawke. In 1983, his government was sworn in after the federal election, and that began one of the most influential economic reform periods in modern Australian history. What would Bob Hawke make of the Aussie housing market today? Real estate really has taken a back seat to the headlines lately, with the war in Iran dominating the news cycle. But behind the scenes, the Reserve Bank is watching events very closely. In fact, over the past week, both the RBA Governor Michelle Bullock and the Deputy Governor Andrew Hauser have made it very clear about the conflict, particularly through oil prices and inflation, saying that it could influence interest rate decisions heading into their meeting, their board meeting, which is taking place next week. So let's right now go to Sydney, catch up with Anthony Landahl, the Managing Director of Equilibria Finance. Welcome on to the Saturday Property Show. Yeah, what would Bob Hawke be saying about real estate, do you think?
Look, if we look at what Hawke might think of real estate in isolation, I think he'd have a lot of concerns. The way the economy is being managed from those days with Hawke and Keating and then Howard and Costello with good, strong economic management is a lot different to how the economy is being managed these days. And that's flowing through to the housing market, as we talk about every couple of weeks.
Yes, I could hear Bob Hawke saying with regard to what's going on, what's this crap about? He would be mortified. So as we move through 2026, a few trends are starting to stand out in the housing market. Borrowing conditions, now they're becoming tougher, meaning buyers are having to be more strategic about where and how they enter the market. What are the emerging trends that you're seeing? What's standing out for you this year so far?
Yeah, there's two really distinct emerging trends that are really being driven by housing affordability. We've talked a lot about housing affordability. There's been a lot of data provided, but what we're really now seeing is some trends developing. The first major trend is we're getting the regional markets outperforming the city pretty consistently now. Over the last 12 months, the regionals have grown close to 11%, whereas the major capitals are at 8.6%. The regional market median value is still around 700,000 nationally, whereas capital cities are over $1 million. The other main trend we're seeing is units are now outperforming houses quite consistently. We've seen capital growth in some areas where units are under $1 million of close to 20%, which is quite extraordinary. A couple of trends really being driven by affordability, really being driven by price points under $1 million.
Yeah, really interesting about the regional versus the major cities. That is something, that trend is going to continue to mushroom. It's just a fact of life, because as the affordability bites, where do people move to? They are moving regionally. Now, the Reserve Bank, as I mentioned, is very clear on the alert right now. The Deputy Governor, as well as all the other comments that are flying out of the RBA, Andrew Hauser described inflation as potentially toxic if it's allowed to get out of control. The conflict in Iran, as I say, it's pushing global oil prices higher. The economists now say odds on another rate increase coming up next week. How do you see that all unfolding?
Yeah, look, the last couple of weeks, the commentary shifted. We've had essentially 3 of the major banks now come out and say there'll be a rate increase in the March meeting. We had headline inflation sitting at 3.8%, which is well out of the target range before the Iran conflict started. We've got a tight employment market. The main driver is obviously the petrol prices. They're up by about some 40% since the supply shock, which is just adding to inflationary pressure. My instinct is they're going to put rates up in March and in May. So we're looking at potentially 50 basis points to knock this on the head as quickly as they can. They had inflation get out of control a couple of years ago, and I don't think they want that to happen again.
Yeah, I'm with you 100% that they are going to raise it. When you've got the deputy calling inflation toxic, that is kind of a bit of a forewarner. Stand by, the rate is going to go up. And another interesting trend right now is how much investor lending has grown. You compare it to 5 years ago, investors now represent a much bigger share of the mortgage market. Rising rents, they are a big driver, but so too is the search for stable long-term assets. Even with this global uncertainty, many investors see Australian property as a relatively safe place to park capital. Do you see this trend set to continue with the current global instability?
Yeah, I think as an asset class, whether it's periods of global instability or in Australia, the ongoing capital growth, property is seen as a good long-term stable investment. Obviously, we're seeing a lot of fluctuation across the share markets at the moment with the Iran conflict, and that might be short-term lived. But as you commented on, investors are back. They're now some 40% of credit flows. To give an example, first home buyers are around 20-odd%. So investor activity at the moment is double that of first home buyers, and it really is driven by the growth in home values and in capital values. I guess there is some potential changes to CGT on the horizon in May, which may have some impact on new investors or those building a portfolio. But right now, investors are back. The other thing investors are doing is they're fishing in the same pond as first home buyers. That $1 million property mark and under is very attractive to investors and is often the price point for first home buyers. So it's making those markets very, very buoyant at the moment.
It is our Saturday morning property show, trying to make sense of the last 7 days and how that may impact on you. It does seem unrelenting at the moment, and after the break, we'll take a look at the banks and credit flow. That is next.
Let's fuel your passion for property together. Join us, along with our industry experts, to help inspire and inform your next real estate decision. Get insider tips from industry professionals and level up your real estate game by unlocking the secrets of successful real estate transactions.
It's a Real Estate Saturday. Good luck too if you are right now fueling up on brekkie, ready to walk out that door and look at properties across Australia. And my quote for the weekend comes from Steve Jobs. Your time, he says, is limited, so don't waste it living someone else's life. Good advice. Anthony Landahl is with me talking all things real estate. Now, Anthony, new lending rules have effectively tightened the screws on borrowers, with limits now in place for loans where debt rises above 6 times a borrower's income. Combined with higher interest rates, that's closing the door on easy credit and forcing many buyers to rethink what they can afford. How do you see the banks and the credit policy playing out at the moment?
Yeah, we've absolutely seen a tightening in credit policy and navigating the banks. That is impacting what some people can do. One of the ones you noted was more cautionary approach around debt to income ratios. We're also seeing a more cautionary approach around low deposit loans or higher loan to value ratio loans. In addition, we're also seeing some more cautionary approach around interest-only borrowings as well, where lenders essentially want owner-occupiers particularly to be paying down or amortising their loan. That all impacts what borrowers can do, and that all makes our job a lot more important around finding the right provider for our clients, understanding the policies of banks. Every bank has a different policy for salary earners, for self-employed, and navigating the credit to get the best outcome for the client, but also making sure we're comfortable and the client's comfortable around what they're borrowing and what their repayments are.
One of the things that seem to sort of come up in conversations quite a lot this year, I think we've touched on it maybe once this year, and that is intergenerational, the way in which the families are sharing the load. I talk to CEOs, principals of real estate companies. They're all telling me the same thing, that multi-generational living is up. People are looking more and more at these tiny homes, putting something on the backyard. No doubt you are engaged in the same sort of conversations that I'm talking about, that these principals are talking about. Everybody seems to be talking about multi-generational living.
Absolutely. And we've seen an absolute uplift in those conversations, people actually executing those type of strategies over the last 6 to 12 months. Affordability for some people is genuinely making living in Sydney unachievable and unattainable. We're currently helping a family renovate a property into 2 separate dwellings for mum and dad downstairs and the family upstairs with children. We've had properties where estate planning's happening earlier in terms of transfer of title and granny flats being built out the back. So it's absolutely a change in conversation for people responding to affordability challenges. And secondly, the banks are following. There's now more flexibility and opportunity for borrowing for these sort of intergenerational changes to existing properties that the banks are responding to.
Yeah, the banks obviously look at the trends and they'll follow the trend if it's going to make them money. And this is a major trend. And just picking up off the back of what you were talking about earlier, regionals versus the major cities and the way that regionals are going up faster. If you take a look at a Brisbane 4 or 5 years ago, somebody wanting to get their child into the market, they're looking at this whole multi-generational, putting something tiny on the backyard. But there's going to come a point where instead of these major cities, you're going to have people move into the regional areas and do exactly that just to keep up with the pace of the cost of the housing market.
It's a massive demographic shift. A lot of people now are commuting from regional areas. A lot of the regionals that have really grown are within a couple of hours of a capital city, and they might work from home 2 or 3 days a week and put up with a commute into the city. Other people are maybe 3 or 4 hours out in the regions and totally re-looking at how they work. They might move their business premises out to the regions just to get the affordability and the lifestyle that they just cannot achieve in the city. So there's been a big demographic shift in terms of the intergenerational living as well as regional areas now outperforming the city by quite a stark amount, which is changing the way we live, changing the way people do business and changing the way people work.
Yeah, and that'll wrap us up on our Saturday morning. You're not even in Sydney. Talking of the regions, aren't you somewhere regionally at the moment?
Well, I've been travelling a little bit with some work commitments. I've been in Melbourne, I've been in Brisbane. I'm up on the Northern Beaches area at the moment. So, yeah, it'll be nice to get home for the weekend and take it easy.
Each week, we bring you in-depth real estate discussions, including inspiring stories from homeowners, knowledgeable real estate professionals and economists. Whether you're a buyer, seller, or just a real estate enthusiast, we are your ultimate property podcast. We connect you to the best real estate information across Australia. The Real Estate Podcast.